Welcome everyone to the super easy, just basic kind of beginner level training. So as you guys know, we kind of separated the group so we would be able to accommodate the people who have never traded before and or they've traded, but they've never like actively traded in a way where they have basic, foundational knowledge. So I say all that to say this, that not every one of us kind of learned from IML. As you guys know, I started my education through IML. I was just looking for a way to buy some Bitcoin because I heard it was the next big thing. I didn't even know what Forex was at the time, and I ended up getting started with IML, and that's where I got the foundation of my knowledge. But I did not stop there. I ended up continuing on to baby pips. I took several classes, paid $5,000 and $10,000 for private trainers to learn different things. I've even more recently paid stupid amounts of money for stupid levels of things. Like once you actually pay the money, then you know. But either way, most of us who are successful in trading have gotten there because they got knowledge, not just chart time. So my goal tonight is to kind of have a video for the SuperEZ family that explains in the most layman terms I am physically possible of the basics of what we're doing when we're buying and selling currency pairs. And kind of the same thing applies to stocks, not exactly across the board, but close enough. So as you guys know, that's kind of like my bread and butter setup. But what I'm going to start with actually is a very simple website. It's not fancy. There's 1,000 others. This one just was short enough for me to think it was worth putting on here because some of them are way too long and some of them are way too short. So the first thing is, as you guys noticed, Elvis posted in the group, the Forex market literally just hit $6.6 trillion. Let me go to mute, everyone. Mute all. Continue. There we go. I got everybody muted. So if you're not speaking, please don't unmute yourself. All right. I'm going to try to do this another way. Mute all, and I'm not going to allow you to unmute yourself. There we go. Start. So what is Forex? As you guys know, Elvis posted in the group that it's literally, as of like yesterday, a $6.6 trillion industry, meaning that they process over $6.6 trillion per day. That means people like you, me, Wells Fargo, the banks, the federal government, hedge fund managers, private companies, even a lot of nonprofits have a private investor that they use to kind of take a small donation and then multiply that donation because it's just smart money. Think about it this way, and most nonprofits are not taxed, so it's really, really smart money, but I won't get into too much of that. So either way, for all the things you don't know, Forex is basically you're buying one currency or selling another, and you're doing it based off of each currency has a certain value. So if I went to the bank today and I exchanged a few dollars for a few euros because I was traveling or for whatever other purpose, I would have to pay the difference, or I would either gain or lose the difference in what I was doing, not to mention fees, because all businesses have fees, and that transaction also has a fee involved with it. So there's a difference in the value of the euro dollar versus the American dollar, right? And that is literally what we're doing. We are using our charts, using either, they call it technical analysis if you're looking at charts, or they call it fundamentals if you're looking mostly at news and or company information for stocks, in terms of where you're getting information from to decide if you are buying or selling this currency pair. So after talking with somebody a couple days ago who was literally said they were trading for 5 years and they didn't know like what the base currency was and the quote currency was, they didn't know that if you're buying Euro USD, the euro should be stronger than the US dollar. They just look at charts all day and try to figure out what that means based off of what they've learned in terms of technical analysis. They've never like went through the steps, or maybe they have and they didn't retain it, I'm not sure. But either way, they don't have the foundational knowledge to understand what we're doing. So this is kind of just a brief overview in terms of what the base currency is and what the quote currency is. When we are entering into the market and we're saying that we're buying Euro USD, okay, we are buying the euro, therefore selling the dollar simultaneously. And there's tons of videos, YouTubes, there's tons of websites that will explain it far better than I can. But this is the kind of stuff that you're going to need to know if you want to treat this like a career. I mean, as you know, it's possible, and I tell you that all the time, to turn a couple $100 into six figures within a few months. You can even do it multiple times in a year. It's possible. And that is the most exciting things I could say to you guys in the most, there are no other words just to say that in all honesty, how true that is. But some of you guys need to get to the point where you're maybe making weekly withdrawals and or at least are able to, replace your income. Maybe just 50 to 100,000 a year, which is more than some of you guys make in your day job. So just to get an idea of what we're doing, maybe it'd be a good time to start spending less time on the charts. And a rule that I made for myself when I first started was I was going to spend 90% of my time learning, 9% of my time charting, and 1% of my time trading. And I stuck with that for quite some time, and I got pretty good at it and sufficient. I learned a lot, obviously. So that's maybe a good idea if you guys are taking notes, something that you guys can definitely consider doing. So this is just a generic website. I didn't want to promote or market any other company. I wanted something really simple and short, just to kind of go over the very basics that, yes, when we are entering into a Euro USD trade, if this was GBP USD and we were trying to sell it, okay, we would need the US dollar to be stronger than the GBP pound, right, the Great Britain pound. We would need the difference, just so you guys are kind of fully very, very aware of that. The spread is what you're going to pay to enter into this trade. That comes out immediately, so whether you win, lose, or break even, you have already paid the spread. For the most part, that stays pretty stable in terms of most brokers. I don't want to speak across the board because there is some differences in terms of, obviously, when the sessions change, the spreads change. So some brokers have what they call a fixed spread, which is really only beneficial dollar for dollar if you're trading news. And then obviously most brokers have that kind of the fluctuating ones. But the spread you paid when you got in is already paid. If it fluctuates throughout while you're in the trade, you will pay more, but you'll never end up paying less. So even if the spread goes down, you won't get that money back, if that makes sense, just so you guys are aware of in terms of how the spread works. And yes, the spread can also keep you from hitting your stop loss or take profit, because when you're measuring that, and I'll show you on the charts, you have to kind of account for the spread, which may or may not make the price actually hit those target areas. So the pips is how we measure. Typically speaking, it's the second to last digit. There are exceptions to this. JPY pairs are exceptions. Cryptos are exceptions. Stocks are exceptions. But a way that I always remember is we're measuring the second to last digit for the pip. And across the board, that usually works pretty well. And that's all you're doing. So if we were looking at this pair, for example, obviously that's the same. That's a two pip spread because they're dropping the last, whatever. Let's see, 1, 2, 3, 4. 1, 2, 3, 4. But when we're on the charts, you're dropping the last digit. So that's how I figure out where the spreads are personally. It has worked exponentially well for me. This is technically the last digit. But when we're on our charts, you'll be able to see that usually there's a pipette, and we don't measure that because it's insignificant in terms of dollar for dollar. So this is just a really foundation that I'm not going to go over verbatim word for word, but I wanted you guys to get an idea of something that you should be looking at and learning from before you spend more time looking at candles, and then just everyone's an expert trader when they're back testing, but in forward testing, a lot of people aren't having that much luck. So like any other business, 95% of businesses fail. 95% of entrepreneurs fail. One of my old business trainers has a quote that says 98% of people are either dead or dead broke by the age of 65. And I was real young the first time I heard that, and it hit me, because I knew a lot of older people who were now in retirement age and who were struggling. I knew a lot of people from all walks of life, who most of which never hit something amazing. Most of the people I grew up with didn't come from money. They didn't come from incredible backgrounds. So when I heard that you're either going to be dead or dead broke by the age of 65, you have a 98% chance. 2% of people in the world are doing well financially at 65 years old. That's a concept that was just mind-blowing to me. So when you know this much, that the odds are literally stacked against you, which I don't usually talk about the negative side of things, but I'm saying that to you guys tonight so you understand that when you go to learn this information, learn it in its entirety. Treat it like it's an education. Treat it like it's something that will pay you like a college degree would. And some of us have college degrees that never paid us very well. So if you're one of those people, just erase that I said that. but you get the point. Treat this like it's something that will be a six-figure career, and it will become that for you. Because even if you spent a few months, putting $100 in and you build those accounts and you hit six figures one time this year, most people don't make six figures in their day-to-day jobs. So even if you spent $100 and you have a rule there where you're only allowed to, deposit $200 every 2 weeks, and then if you blow it, you blow it. Oh well. And you do that consistently for a year. Let's say you only hit $50,000 twice, or you only hit six figures twice, minus fees and taxes and all the stuff that comes with being a high income earner. You still made out pretty well at the end of the year. So that would only account for approximately 3 to 5 months of winning, trades. The other, 8 months? Well, 7 months technically, up to 7 months, we're losing or break even. Just so you guys get a bigger picture of what business looks like. Most businesses don't operate in the green or in the black. I like to say green, it makes me happy, but in the black every day. Most businesses have an accumulation of, during their Christmas time, their sales were high. That kept the store running during January. During this football season, all the restaurants were super spiked, on these days. That basically paid for the electricity in Tuesday, Wednesday, and Thursday. When you get a better concept of business, you're going to grow as a person and you're going to grow as a trader and an entrepreneur. So, because that is what we are. We are entrepreneurs. And the sooner you guys realize that, the more successful you'll be. So, again, I don't want to talk too long, but I wanted to just go from a totally different angle that's going to talk to all the super new people. As you guys know, like I used Euro USD as an example. Imagine these are currencies, specifically like one of the ones I use on my chart. If we are trying to buy, long is another word, bull, long, bought, those are all the same in terms of Forex terminology. We need the euro to be stronger than the US dollar. So we would need the euro to be going up and the US dollar to be going down. If we are trying to short and or sell, we need that euro to be weak and the US dollar to be strong. I hope I said that right. But that's the whole entire concept of everything that you're trading. Your money that you're earning comes from the difference. Your money that you're earning comes from the pips. It moves. That's how you're making money. So is to understand the currencies and what decides the value of a currency. Again, I'm not an economic expert by any means. I don't have a degree in this. I went through most of the trainings that a lot of other people have. But the basics is, in terms of Forex, the currency is valued based off of what's going on in their country politically, economically, wartime stuff. Did Saudi Arabia just, blow up another oil field? Great. I mean, there's a billion things that are going on. Elections, Brexit. It's all determined by that. Did you just get a huge hurricane, which puts a huge damper on the government, especially in smaller nations like Japan and those types of things. So to understand that, that's what we're doing, is we're betting and we're investing based off of the entire country, the value of the entire country. So when we talk about major pairs, we're talking about USD pairs. They all trade approximately $10 per pip. Crosses or anything that doesn't have USD. And exotics, which I see more and more people ask about on my calls, are typically phenomenal movers, but more risky because there's not as much news in terms of those, what we use the word exotic nations. We don't have as much access to, let's see, there we go. We don't have as much access to their information. So that just puts us, at a deficit in terms of information. Just something to kind of consider. This is just to go over basics because some of you guys literally never have, like ever. A USD Mexican is still considered exotic because although it has USD, Mexican is not considered a regular pair. And that's really it. What I want to do is go to my charts after maybe talking about candles. I wanted to talk about that on my chart. Most of us are trading with Japanese candlesticks. There is a free app called JCP. The guy who runs it, I've talked to a multitude of times. He is a phenomenal person. He's usually available for anything you may need on WhatsApp. And he's just a really cool, down-to-earth guy. The guy who created it and is constantly improving it. He sends out free quotes, free, not necessarily signals, but free information, I'm going to say it that way, about different currencies, about price action, if you will, about what each one of these means. This is the most commonly used trading candle, because that's what we'll call it, price in the entire market, across the board, across the nations. So not knowing this is detrimental. A lot of people want to use the trend-based candles, including Heiken Ashi, which I understand they have a value. Some people are using the trend candles, and they're using a multitude of things. But at the end of the day, understanding and knowing Japanese candlesticks is a very advantageous choice that you can make. So if you haven't spent a weekend, on your exercise bike or whatever, maybe at the beach, and you're just reading through it, that is a free resource where you will get a ton of information. So please, please, please download that app. It's called JCP, and it'll tell you far more than I ever could in any amount of time, because I'm way too long-winded. What you guys need to know is that the value of this, and I don't want to explain it, mess it up, is something you need to learn. This gives you a lot of information that you're not getting from other candles. Not to say that Heiken Ashi candles are not advantageous. I know the Renkos are beautiful in theory, but they're not live, so they're irrelevant if you're asking me. Just to give you an idea, I don't typically use this bar chart. I never have. Those little lines to the side confuse me, and I think they're silly. But again, this is the second most commonly used chart is a pure line graph, especially for long-term traders. So when you're having trouble finding support and resistance, when you're having trouble seeing what the market's doing, go to a completely naked chart and just put the line chart on it. You can click on it on MT4, which I'll do here shortly. I might have to go to TradingView to show you the cleaner version, but it really cleans it up in a way that says, whoa, I get it. Like, you'll be able to see what the market's doing specifically. You'll also see the peaks, which are super relevant because that's where market is turning around. So that was pretty much what I wanted to at least barely touch in terms of going on this website, because I really want you guys to start spending some time on things that are not the charts. Again, I said, if you're going to follow my lead, it would be 90% of the time studying, 9% of the time looking at charts, 1% of the time taking trades. Most successful businesses operate, especially entrepreneurs, off of like the 80-20 rule. 80% is development, improving education. It's the management area. 20% is the action. And trading, I don't think it's any different. We're overacting, or over-actioning, trying to get results. And most of the time, we're just messing up by doing so. So that kind of, I wrote down a few things, covers most of what I wanted to say about that. But yeah, it definitely starts somewhere in terms of your trading. As you guys noticed, somebody in the group was talking about the psychology, and somebody had an 80% winning ratio in live, in demo, but then went live, and it totally changed, because it is different. It's different even for me calling live trades, but it's kind of part of the growth process that we all have to adapt and overcome. If we follow a set of rules, we are void, or more closely void, from the drama that is, what we would call the psychology that's kind of holding us back. So for those of you who are on my live calls, you know that this is kind of the basic, and let me get this off, get to a better pair at least. This is our triple arrow system right here that I have on our screen currently. As soon as it will load. The internet's been a little floofy today. I shut it down when I went to Zumba, but I don't know what it is. Everyone says that, but we work on the internet, so we have to say it. So I think we're all tired of saying it. We're all tired of hearing it, but nonetheless, saying it again. So like I was saying, this is our triple arrow chart system. This is on USD, or odd USD. Most of the market is moving for this big amounts of American news we have tomorrow. Keep in mind, they're probably going to jolt it hard. We don't know what's going to happen. There's no way to know, and there's not much we can do about it. So if you want to take some short-term trades, go to the smaller time frames and do so, but to avoid long swing trades at this moment, because you're probably just going to get stuck. It may or may not go in your favor, but you don't want to put yourself in unnecessary risk. So, but in terms of the chart we're looking at, guys, what I wanted to show you, if this would go exactly where I wanted it to go, was a few different variations of what's possible. So this is literally a naked chart. We have a few moving averages on here, and that's it. Same pair, odd USD. What I want to show you guys more than anything is no arrows, no nothing, no dots, no MACD, no ADX, nothing. If we followed a few simple rules, and I'll remove this for the moment being, actually I'll make it black so we can't see it, and then I'll turn it back the other color so we can. Okay. If we remove the 50 moving average and we followed literally just one rule with no other indicators, what we learned, and there's several sites that will confirm this if you dig deep enough into your written and reading research about, investing and all that other good stuff, is that most things are accurate, greater than 60 to 70% of the time individually. So even just your RSI, following it on a higher time frame, following with the specific rules, one indicator is accurate anywhere-ish 60% or greater. Almost everything is, because things that are less than 60% individually don't usually hit the market. They fail. So the things that you have in the market, I don't care what cool tool that came from what company, from whatever, they have X percentage of accuracy as an individually standing component. So you guys know I'm a fan of the 8 and 18. I love the money tree string line, but this was available on my tablet and on the go, so I kind of got hooked on using this again. I really feel like they're the same in terms of how they function. They're pretty close. But if we backtest just this one thing, the 8 and 18 crossover on the 4 hour, I'll move my zoom bar. I don't know if you guys can see this. It's 4 hour. Odd USD. This will be right, give or take. Most EMA crossovers based off the ratio is accurate, like 70-ish% of the time. The majority of losses that we're experiencing, and that includes myself and everybody else, are coming from poor management, okay, poor entries, poor rules, and poor psychology. So obviously there was nothing we could do about this. This would have got us in, got us out, got us in, got us out, got us in, got us out, and so on. This is a mess. But this happened at one point, this happened, okay, and this happened. So if I just do this, just to show you guys a different way of thinking about the market, and you can do this with most EMAs, you can put an individual one on here. As you know that when you first join an MT4 of almost any platform, the first chart is literally candles with only the 14 moving average. That's it. So you guys know the functionality of that. That is what most naked charts appear as when you first sign up with an MT4. So back to the crossover mentality. If we follow this most of the time, and we had a written set of rules with the risk to reward ratio that was more rewarded for what was risked, there is very little chance you would be losing money at the end of the month. It doesn't mean you might not lose money Tuesday through Thursday one week. I'm saying at the end of the month, you would have more wins than losses, and you would be a profitable trader following one rule with nothing else with it. Nothing. Okay? And when you start to grasp that, then all of a sudden your mentality changes. So I am going to go ahead and right click on my chart, indicator list, go back to that moving average, edit, turn it back to white. The 50 is one of the most commonly used moving averages. So I'm going to go ahead and take off the 18. Wait a minute, silly me. Delete. So if we only entered trades that broke the 50, only that, and that's all we did. No arrows, no lines, no nothing. Again, we'd be accurate more frequently than we would be inaccurate. And you guys pick any pair you want and go back test this, preferably on the 4 hour, 1 hour. 4 hours better, but you see. What it comes down to is take profits, stop losses, risk to rewards, and basic trade management. That is literally going to be the make or break of the entire aspect of everything you're doing. So this would have got you in, and if you had stayed in until it recrossed back over, you would have made money. If you had a certain take profit, okay, versus a stop loss, you would have made money. Okay, that's how that works. This is still a win, this was still a win. Provided your timing is obviously perfect, because you'd have to catch every one of them. This is a mess, and none of us can avoid this, but same concept. You would have won, you would have won. Just to show you a totally different concept in terms of trading. So I'm going to go ahead and remove that moving average. Okay. Now we are literally just stuck with the 50. The only thing on here is the 50 moving average. And the reason why I wanted to show you guys that is for this. We know that the triple arrow repaints, but you know what doesn't repaint? The 50 moving average. So when we actually start combining things together, and again, with the entire concept of we actually follow rules, and then we're willing to hold it until we are confirmed to exit, or whatever rules we have followed based off of the ADR, based off of take profits, based off of the different algorithms and mathematical equations we have created to figure out exactly what we need to be successful traders. What you're going to find is, this is only the big arrow. Yes, it repaints, right? So what I want to show you is 4 hour chart, odd USD, Oh no, one moment. No, out. I love you. Yeah, you forgot. That's my little guy. He's walking around with an iPad, coming in here, I'm sure, for something. But here's what I want to show you. I'm going to draw just a handful of vertical lines and pretend, because most of us who work with the SuperEZ system, we know that we love the system and we love the family, but then that whole, oh my gosh, it repainted topic comes up about 100 times. It comes up with the daily dots. It comes up with pretty much everything. So I'm just going to draw a few lines to teach you guys something that hopefully you will have seen differently after tonight. For those of you who don't need it, I'm sorry that you're kind of hanging out with me, but it sure beats watching cable TV. So hang out with me anyways and learn a little bit something with the team. The whole concept here, guys, is to go over a totally different mentality. Let's just assume, ready? I'm going to check the chat real quick. These are, everything I use is EMAs. Everything, always. I hope that they will watch this. Because if you guys really want to get to another thing, I promise you this is how you do it. So I'm only on here is the 50 EMA. Only thing we have on here is the big arrow, which yes, repaints. And I can go on and on, but I want to save us some time and just keep it as basic and naked as possible, because we can put whatever repainting indicator we want, including our daily dots, the big arrow, whatever repainting one we want. But I want to keep it basic for the sake of learning something. So let's assume that that big arrow was right here, which there's a good chance it was. Okay, we're going to start with this one. Well, I should have started with this one, but I want to be able to move from buy to sell. Let's assume that it was right here saying it's a sell. The problem, silly butt, thank you. The problem is price never came back down and fully broke this 50. So if you had followed a certain set of rules, you would have avoided most of these. You wouldn't have avoided, sorry, that's the Apple mouse. The Apple mouse has a mind of its own. Okay. If you, this one, yeah, because we would have broke the 50. But even then, you would have still had enough, I believe, to take a profit. And keep in mind, this is a slow mover. So give or take. And obviously, guys, this is perfect timing. And nothing is perfect timing in the Forex market, because hopefully some of us have a life where we're working on getting one. Like I was saying, let's assume the big arrow was here. Yep, it repainted. Let's assume the daily dots were here. Odds are they were, because we have a high and we have another. We didn't break another high. So odds are those daily dots were back here. Okay, odds are we had a big arrow right here. Odds are we had a big arrow right here. But the thing is, we never broke the 50. Okay, we never broke the 50 and retested it. That was our indication that this wasn't ready yet. And no, this isn't going to work 100% of the time. Choppy stuff like this happens and we're stuck. So we can't always, have an answer to that. That's when our oscillators become very, very helpful. But I'm trying to keep it as naked, as basic as possible. Had we taken this big arrow or the daily dots based solely off the break of the 50 and it retested, okay, we would have caught this entire move all the way down, or for X amount of pips, however we wanted to set it based off of whatever algorithm we use or trade manager we use that is going to truly manage your trades in an effective and profitable way. So same thing over here. Let's say we had a buy here. Good chance we did, because of that big move. The big arrow probably showed up. Any of you have been trading with the system long enough to know that. But we never broke the 50. Let's say we had a buy here. This broke the 50, but it was only one candle. The next, and yes, that closed above the 50. However, and that's a bullish, very bullish candle. That would have duped me out, absolutely, for sure. For all the money market makers, we would have said, hey, guess what? Let me see if I can't zoom in and make that a little clearer for you guys. Let's make it super visible. All the market makers would have said, hey, guess what? This looks like a double bottom. This looks like a W. We're definitely buying now. I mean, so everyone sees different things, especially in hindsight. It's always 20/20. And yes, of course, the market gapped at that point, so we're going to exclude that, although that would have told me that it wanted to sell throughout the week. Needless to say, this broke the 50. The next candle was bullish, and yes, it retested 50%, but it never came back up to break this. So now you've got a continuation. We never were able to close back above that 50. So again, not a perfect example, but the oscillators probably would have saved us from this trade. And if we go on throughout history to all the different peaks prior to where you see the big arrow actually stayed stable, you'll see that most of the time, what would have happened if you simply followed a few basic rules, what you would end up having is an 85-ish% system. And once you have an 80-ish, 85, 90-ish% system, now it comes into the sweet balance of like trade managing and finding the right trades, not over leveraging your account, take profits, stop losses, and risk percentages. And that's something I will go over probably exclusively with the six-figure income group, but I will definitely do something of a mathematical nature with the basic SuperEZ group as well. So, because DJ had brought up a great point this morning in class that I really want you guys to understand that it's seriously just math. Once you can work out the math, you got it. So anyways, just to continue the examples, and you can do this with every pair, please don't trust me. Please do your own research. So again, this would have been a bad example. But even in this example, we broke the 50, did not be able to maintain that. Okay? Did break it, retested it. This would have been a great sell. You had a double top lookalike. I'm sure we had a triple arrow here. But when this one happened, it would have given us enough pips and enough time to close that trade. So continuing forward, similar concept. We probably had a triple arrow here, but it didn't break, so we were still waiting. It broke, and we had multiple candles breaking. That's how we know it's going to continue to sell. Same thing here. Very good chance we had buy arrows all the way throughout here. It didn't break, and we could just go on and on. But that's kind of the foundation of understanding how we're using what we're using. So I don't care what your favorite indicator is. I'm going to show you a few other examples. As you guys know, I'm not an uber fan of whatever you call it, of the cloud, but I want to show you something about that too. So what if we use the cloud for the people who love the cloud and the daily dots? Me, I despise this cloud. I think it's ugly. And I think that it's senseless, and I think that the algorithms behind it are iffy at best. So what if we used our triple arrows, because this does have our triple arrows on here, big arrow, little arrow, yellow arrow, daily dots, and just the TK cross. What if that's all of the cloud we used? Because remember, this is a fancy 50. This is based off of a 52 moving average that's weighted and extra wide. These are also moving averages that are weighted and you know, how do you say, programmed to peak at different points. I don't know how they're done exactly, but I could never follow it every time as I read about it. As much as I read about it, I never really could. But if you love the cloud, keep the cloud. You can add your own moving averages. The TK cross is a very, very common one, but it also means that there might be a little bit more foolery because of how common it is. But what if you only took signals that matched up? Before I make the change I want to make and show you. So you have your ADX, my settings. I got them from somebody who's officially a 7-8 figure trader, like publicly, verifiably done. Anyways, our buyer's in control. Momentum is high. We're on odd USD. Our daily dots would not have shown up yet, just so we're not going to count that. But we've got two arrows. We've got the little arrow and the yellow arrow and a TK cross. The most recent buy arrow was here, which may or not have counted because we may have had a sell arrow here. And then it could have reset. So going off of what I see currently and sticking to what I know, this would have been your faster entry. And obviously when it broke out of the cloud, you'd have your slower entry. We can use the system any way our eyes see best. And that's what I want to show you guys tonight. So for sake of conversation, I'm going to go ahead and take off the cloud, something that I would do. Edit, colors. Oh, I'm probably going to mess this up too. I'm going to mess it up in public. That'll be fun. So I'm pretty sure it's this one, none. This one, none. Let's see. Let's go to none. None. Isn't this one supposed to be red? I think so. Let's find out together. Okay, yeah, I fixed it. So what if we only use the TK cross? And I don't prefer how they kind of meld together right here. It makes it really hard to see. But if we only used our arrows on any time frame, this would work. Granted, your stop loss and your take profit would be marginally, hugely, definitely not marginally, but hugely different if you were using smaller time frames. But you can totally do this. So what if we ignore the cloud? Like 100% ignore the cloud. Pretend like it doesn't exist. I'm actually going to take off this lagging span because most people don't know how to use that either. So I'm going to take that off too, just to show you a different chart. What I want to get across to you guys is I don't care what rules we come up with collectively. I don't care what system, per se. I'm partial to Pat, I'm partial to the triple arrows, I'm partial to the daily dots. I'm mostly partial to the people in the group. Like, I love them. But having said that, I don't care which system we use. I'm not partial to that cloud, like everybody knows, or to these numbers per se. But for those of you who are, we can use this any way that we decide to use it. And watch this. If I were to use a TK cross, I would be using it with the regular 50 moving average, not that big cloud that's gumpy and funky, because it's just, my eyes don't like it. It makes me go, yuck. So same concept. We are on a triple arrow chart. We are on odd USD. Okay. If we followed these rules, let's see. Yeah, I like the 50 way more than that cloud. And yes, I'll go over the ADX setting. So if we just follow just this chart, nothing else. So we don't add a MACD, we don't add anything else, and we simply follow these rules. Do you realize that you would have, give or take, an 85% trading system? Just exactly this. This is slightly more accurate, supposedly, than the 8 and 18. It's just more funky to my eyes. So I don't know what I don't know, but that's, statistically what the numbers are for the TK cross. So if we only followed this, if we had enough confirmations, let's use a not perfect example, because I'm infamous for that. Okay, so not the perfect one with the big arrow. On this trade right here, this would have been 2000, silly me, which is 1 p.m. Eastern Standard Time, if you want to know what time this move happened. Okay, we had 2 arrows. We had our buyers. What in the world? Our buyers are in control on the ADX. If we go up, we had enough daily dots for this to actually be stable, so we know for sure this was here. It didn't repaint here. It was here. We have a TK cross, double arrows. So that's 1, 2, 3, 4, 5, including the ADX. 5 confirmations, and 6 when it broke the 50 and then retested. As soon as we got this green bar right here, which, yes, would have been the open of Asian session, easily we take this trade. Granted, this is an Asian pair, though, too. So just to tell you exactly what happened. Slow mover, and you still got 100 pips. Safely, perfectly. No drama, no drawdown. Which isn't always the case, and I don't mind drawdown, but just to show you what's possible in terms of learning how to create a set of rules. And the entire concept is, I don't care which one of these ones we're about to go over you decide to use, because the ultimate idea in trading is simply to buy low and sell high. That's the concept number 1. And the concept number 2, if you're asking me, who's just another person who, again, was not a professional trader of any means, is you're trying to catch the continuation. So everyone wants to catch the reversal. But remember that once we're below the 50, we're in the same direction as the big arrow, we're good to go. Every one of these moves to the downside are really safe, awesome moves. So you're trying to catch the continuation in the same way the market is going. That is your other objective. So, but now that we're back on this chart, these simple rules, you would have approximately 85% accuracy. And yes, you have to refresh the chart every time you come to it, because if you want the most accurate version of the dots, it's a necessity. So don't think that you're not going to do that. You definitely need to do that. Whoever is drawing on my screen, make it stop. Hold on. How do I do that again? Annotate. Oh, good job. Thank you. I won't hold it against you. I'd probably be drawing on the screens too. I really want to see the names though pop up. It never saves that setting. Okay, anyways, back to what I was saying. In terms of the ADX, the most important thing, if we deleted every line from here, only kept the white one, is we really want the white line above the 25. Above the 40 is best, but it's harder to find, and obviously you have to wait till later in the move. But it's most accurate above the 40. Bare minimum, you want to avoid these trades that are below the 25. When it's stuck here, this isn't a good example, but I'm sure I can find one. When it's doing this, you're going to avoid this consolidation. One of the reasons why I love the ADX is because it really does mock a currency indicator, and the momentum line helps me avoid consolidation. It's not guaranteed. There's no foolproof way. We can go on and on about that truth. But that momentum line, the white line, stands for the momentum in the market. So where the money is at. Is there a lot of money in the market or no money in the market? That's the momentum, right? Obviously, the D plus is my green. That's my buyers. The DI, the negative DI is my sellers, are my sellers more accurately spoken. And then when the buyers are in control and momentum is strong, I'm looking for buys. When the sellers are in control and the momentum is strong, I'm looking for sells. When this like stagnant kind of thing is happening, I want to stay out. I really need for my sellers to be above the 20 line for sure. I usually take this off of most charts, but I need for the momentum to be above the 25 if I'm selling. If I'm buying, I need that buyer to be above the 20, 25. My momentum for sure above the 25 to buy. So just to give you a different visual idea of a different level of a crossover, because we went over the 8 and 18 alone. We went over the 8 and the 50 alone. We went over the 50 alone. Now we're going over the TK. We went over the TK cross alone. And now we're adding the cloud. Well, not the cloud, but the 50. These are all really comparable setups. These are all very comparable settings. They're really not significantly different in a way that's going to make or break your account. It comes down to your ability to follow and execute the exact sets of rules. So if your eyes happen to see this better, okay, use this and use it exclusively. And don't change a single thing for 2 weeks to a month. Only take trades based off of this. You can use whatever time frame you want, but please stay consistent at it. So if you're testing this on the 4 hour, don't take 1 hour trades. If you're testing this on the 15 or 30 minute, don't take 1 hour trades. Stay consistent so when we have numbers to go off of, now we know how to expand your stop loss or your take profit in a way that will work for the time frame you're using. We can't have the same set of rules for 4 hour trades, 1 hour trades, and 15-minute trades. That simply will not work, okay? There was something I was going to say. I'm losing my thought process. I forget now. I'll remember, maybe, at some point. But just to kind of give you an idea, it's super doable. And remember, we don't need every confirmation. So using this exact chart setup, exactly as you see it, we can add as much as or take away as much as we want. In this case, we have a total of 3 arrows, so that's 3 pieces of evidence. We have our daily dots, that's 4. The TK cross is 5. The break of the 50 is 6. Okay, and of course our ADX saying it is selling, which means sellers are in control, and the momentum is up is 7. So that's 1, 2, 3, 4, 5, 6, 7. That gives us 7. If we include a break of a trend line and a momentum candle, that would give us 9. The reality is we would only need maybe 7 out of 9 confirmations. And if you take these trades just following these rules, you're going to be amazed at what you can accomplish. Okay, because I know Elvis kind of loves the cloud. I'm not a super fan, but the TK cross is good. If I could just use the TK cross, I would use that. So here's a different version. Again, similar concept, a little bit different settings. So what if we kept the MACD? No Renko bars. We kept it because it's very, very accurate, especially when it starts to break the 0 line. Pretty simple. Since we don't have the 50 on this chart, here would be the rules we'd follow. If it's below the 0 line, we're only looking for sells. Okay? It's below the 0 line. This is a little touch and go. This would have been tricky. But if it's above the 0 line, we're only looking for buys. And we do that across the board. So this could literally replace year 50 in terms of a main indicator. Go back here. Lord almighty. There we go. Similar concept. Only using the MACD. Like I've talked about in many classes, you have your initial fast entry, which is when your buyers cross over your sellers or your sellers cross over your buyers. For example, this is your fast entry, which everybody wants that entry. I get it. That is what feels like the safest entry. It feels good to enter here, but you might only be getting a pullback. So you might enter, what is this? You might enter here and only be able to get to there, which isn't necessarily bad if you know what you're doing. If you know how to trade that way, it's not necessarily bad. If you have enough other confirmations, go for it. But the safest form of trading is when you stay on the side of the trend. So if the market is up, we are buying. If the market is down here, we are selling. And we don't go against it. So again, following just this kind of setup, notice that there are no arrows. Just for conversational purposes, because I happen to like this arrow, I will add this right here as soon as it will let me. I really like the little arrow. I'm going to turn off the alert because Lord knows this bugs me. It's not very kind. All those alerts all the time. None. And bear with me, this is the original version of the, so it's not the one that comes all nice and programmed and you don't have to change the colors on it. I'm not going to bother with the colors this time. I'm just going to keep it as is. What you'll notice about the little arrows is they don't repaint very often, like almost at all, just so you know. The little arrows very rarely repaint. So just using this setup, I know it's not very appealing to the eyes with the wrong colors, but for sake of conversation, on this chart, I can tell you exactly how many confirmations we have. Of course, there's nothing we can do when the market gives us this. The momentum here would have helped, but it's not a guarantee. So aside from that, this right here would have helped, but again, not a guarantee, because we would have been trying to buy or sell, and that would tell us to stay out, okay, to the best of our ability. We're still looking for that magic sauce. But to go to a non-perfect example, again, let's use this sell. Not the biggest one, not the biggest buy on the screen. We have quite a few confirmations, guys, using nothing else but these rules. And if you follow these to a T, you're going to have X amount of percent of accuracy. I believe this one is approximately 87 with the little arrows. That's why I added them. So we have our daily dots, which again, you have to always refresh your chart if you want the most updated version. Always do that every time you come, especially if you're using repainting indicators. You're going to get the most bang for your buck. And please don't be hating on repainting indicators, because anything that doesn't repaint by definition is lagging. So the combination of lagging and leading indicators is what makes this system a good system. Not because, you know, the group of people is great, but that's what makes it a good system, is the repainting plus the lagging equals, you know, good. So, because if we only use lagging indicators, then we'll always be behind. So, hold on, let me get a drink. I've been talking a long time. Wow. Okay, that's like water. My little fancy water bottle. So, what I was saying was only counting what we have on the screen here. We can count it several different ways. But just to be super simple, we have daily dots, a little arrow, 8 and 18 crossover. So that's 3. 1, 2, 3. Our momentum is up. Therefore, we are going to count the fact that the sellers are in control. So that's 4. I typically count my MACD as 2 different indicators. 1 is the crossover, and 2 is the break of the 0. So that would be 5, 6, okay? Just to give you an idea, obviously the break of a trend line counts as 1. That's a very, very standard, smart way to trade. So to give you an idea, give or take how you drew it, if you drew it from this to here, 1, 2, run it through. If you kind of followed more through the top, there's multiple ways and neither are necessarily wrong. It just depends on how your eyes see it, but it has to have 2 touches to make a trend line. It's 1, 2, run it through. So again, that would be daily dots, little arrow, 8 and 18 crossover, that's 3. A momentum candle would count as 4. A break of a trend line would count as 5. ADX, confirmation that the sellers are in control and momentum is above the 25, counts as 6. The cross of the MACD counts as 7. The break of the 0 out of the MACD counts as 8. So if we only took trades that had 7 out of 8 or 8 out of 8, for an example, and this right here happened approximately, early morning New York. This happened around the times we're jumping on calls. Exactly, this exact setup. Not a fast mover, but again, same concept. Went more than 100 pips. This is another thing you guys can do. It depends on what your eyes see best, though. So the reason I'm going over all this with you is not to confuse every new person. It's not to kind of run you off. It's to be able to say, hey, so let's take these arrows, let's take these dots, let's make a system that your eyes see well. Sorry that these aren't perfectly colored. I will change the color of them just to make it a little prettier, and then I'll go to the next chart. But this is what I really want you guys to understand and to know, is that however we see the market. Now, if what we're looking to do is scalp, obviously that means we're taking smaller time frames. Got to be careful with scalping because the stop loss tends to be a little bit larger than the take profit. So if you can find a way to scalp that does not, put your account at risk with poor risk management using a 5 to 1 risk to reward ratio, 5 being how much you're risking, then you can use this same setup on any time frame. If you're trying to use the daily dots, though, you need to lower the time frame to like the 1 hour or 4 hour dots. And the lower time frame you go to, the less stable any indicator is, the less assured it is. Just so you guys know. But it doesn't mean you can't scalp up a couple of pips, scalp down a couple of pips, just to give you an idea. So this is another option. Again, we went over kind of a way to use the cloud with the cloud or without the cloud. We went over just the moving averages, nothing else. We added the triple with a big arrow only, okay? Do you know how powerful this would be with a little arrow? You'd be surprised. Then we took away the arrows. We only kept the little one because it's the one that repaints the least and is most significant. The 5 and 13 happens too often to matter. But either way, this gives us another concept of how we're looking at these charts. All we're going to do is we're going to set up a set of rules that work for our eyes. So this is kind of a crossover breed of both of them. We have our 50, our 8 and 18, and the arrows and the daily dots with an ADX. It doesn't matter how we use these charts. It doesn't matter. This is the wrong time frame, though. Oh, and the wrong pair in all fairness. So to stay consistent. Similar concept. We can use that TK crossover if our eyes see it better, or if we prefer it better because of its reliability. The TK crossover is very reliable, statistically speaking. So that's not Jenny's opinion. That's not Elvis's opinion. I don't prefer the big dumpiness of the cloud, and I don't like how the lines on the TK cross stick together like this, because that's a whole bunch of I don't know what's happening, and then all these weird ways it moves that are unexplainable to me. I don't prefer that, but statistically, the crossover is extremely accurate. Just so you know. Going back to this chart, which is kind of a meld, if you prefer this or your eyes see it better, this is a very similar concept. You can follow only this and you will have, better than 85% results. What's going to change and what's going to make your trading worthwhile is now your ability to manage trades in terms of your stop losses and your take profits. I really hope I didn't super confuse everybody, but I wanted to go over some basic chart setups in terms of how to use the triple arrows with different sets of rules and different indicators. As you guys know, this is my basic odd USD, tiny time frame granted, but this is my basic triple arrow chart. This is how I have it set. I have it set like this all the time, and this is the one I would check up to because it's the most consistent for me. My chart that doesn't have the triple arrows on it but does have the daily dots is right here. This is kind of my bread and butter. It's got a ton of confirmations, but it's got a ton of confirmations for a reason. Notice I do have the little arrow and the yellow arrow. This is an external thing. But with all of these confirmations, I'm not often wrong. Sometimes it means I got to hold the trade because there's no way to avoid this. Obviously, that was perfect to keep us out here, but sometimes we can't always avoid this very annoying week-long worth of drawdown. And that means your account has to be able to hold, let's say we entered here, 170 pip pullback, which is awful. And you'd have to hold that for what, a week? But either way, similar concept, daily dots, 8 and 18 crossover, we're above the 50. We're only looking for confirmations that say we're buying, and then we do so. And if we were looking for a sell, same concept. This one's a little bit overloaded in terms of indicators, so I'm sorry it's messy on your eyes. But same concept, we have the daily dots, 8 and 18 crossover. We broke the 50, made a lower low. We broke fractal levels. We would scroll all the way down to say, is this ready to sell? In this case, we had enough indicators that told us not to. So fortunately, we got in a better time. We got in here before everything was actually ready. And boom, we sold. Super easy, super simple. There's 1,000 ways to be successful with this. But what I wanted to go over tonight were just some basics and to say, hey, if each and every one of you on this call tonight can honestly pick a handful of rules, I don't care what they are. Maybe you're in love with some weird doohickey that does a peak, which is silly to me. Maybe you're in love with the TDI. Maybe you're in love with something that's fantastic for you. If your eyes can see it, I say you use it. If your mind and who you are and how you're programmed understands that indicator, then yes, please use it. You can use it in conjunction with the triple arrows. You can use it in conjunction with these other things. But now it's about creating a set of rules that say, okay, this is what I'm going to do consistently on this time frame, consistently for 2 weeks. I'm not going to switch it up. I'm not going to do anything else. I'm going to find out exactly how many trades I can take that are accurate. There was just a gentleman in the group talking about his wife, and the second that she went live, they made silly mistakes. Well, I've done that. Most traders have done that. Like, we start making silly mistakes. They're not even explainable mistakes. So when I say follow the rules, I mean like have a checklist for the rules of this is what I see. If I don't see it and I don't check off each thing, then I'm not taking the trade. That level of consistency. And it won't be news-proof. We can't control if somebody bombs an oil field, but it will be good enough that you guys will be like, whoa. So anyways, I am going to open up the floor real quick for any questions and comments and all that good stuff. What levels are those? I can't see on my phone. What, Brent, what levels are what? Tell me. If you tell me, I will answer for you. What levels are those? I can't see. Was I talking about a level? Because I just talked for a long time and I don't remember a level. Oh, ADX, sorry. I was like, I just talked for a while, I forgot already. Okay, so I don't necessarily have to use the 20. I don't mind using it. I'm good without it. But the ones you really have to have are the 40 and the 25. Okay. The ADX I currently have set at 10. I like 10. I'm going to go to indicators and I will show you specifically just so you know. I'll move this over. Edit. So I have it set at 10, set to close. It's white. I will answer your question in a second, Ashanti. The plus I have set at my buyer's color, and then the minus I have set at my seller's color. So you just make sure you follow that according to what your favorite colors are. I prefer the biblical colors, which are purple and green and gold. So those are my favorite. And the levels are 40 and 25. I can delete the 20. I don't mind having it on there. I don't mind not having it. I was taught with it on, so my eyes still see it. And I hit OK. And there you go. This is not a perfect system, but this one momentum line really helps me stay out of a lot of awful trades. Not always, but enough of a percentage of the time to make a dent. So I hope that helps. Rules will save your account and will make you. Absolutely, Jamie. You are my rock star and my guardian angel. Does the Renko the Renko does repaint, Connie. And I don't hate it. I like it visually speaking, and I like the Renko in theory. Actually, I love the Renko in theory, but it's not live. So I don't mind the Renko bars right now. I'm just keeping them up there. I haven't decided yet. It's another pretty thing on my chart, I suppose. Okay, so Ashanti, the spanking brand new, welcome to the team. We are so honored to have you. This was a good night. I will definitely post this recording. Usually they're not like this, but I wanted to kind of answer the people who've never traded before to have a better idea of what to expect and maybe some things they should be looking into. Take less trades, study a lot more. Please don't think you have to be on the charts all the time. And if you're brand new and you start with rules, you will be 10 times more successful than most of the people. So how do you learn about the daily dots? The daily dots are essentially an indicator that are set at a daily time frame, and they are meant to be forms of support and resistance. They can adjust, but so does real support and resistance. So just because we say that this is a support, well, this is a resistance zone right here, which it is, does not mean price can't say, okay, I broke above that, now I want to go up. These are just like, here, look at me zones. And they tend to be very beneficial. The SuperEZ SR dots that are part of your SuperEZ package are what you're going to be using. Simply go into settings and change those to day 1 instead of 4 hour, and then you'll have them. You'll notice that on one of my charts, I do have the original 4 hour ones. So this is a chart. I'm going to go to the 1 hour time frame. I keep the 4 hour on here, but on most of my charts, I don't use the 4 hour because the 4 hour adjusts quite a bit. So I don't personally love them. It's great for a Stairmaster trade, but yeah. How do you set up the TK crossover and how does it compare to the 818 moving averages? I'm sorry, I talked fast, Connie. Yes, it does repaint. So, oh, here, I can unmute you guys. Or I wonder if you guys can raise your hand. Is everybody muted? Because I'll unmute you. I'd much rather talk to you than and read from you. So, yes, the Renko bars can repaint. So I will go to that chart so we know what we're talking about. Right here, this is what we call the Renko confirmation. As you know, we've only had it on the charts a couple of weeks now, some people a little bit more. But yes, this arrow, when it happens, it can repaint. So it might be here when we're looking at it, and then when we look back at the chart, it'll be gone and it'll still be looking like a sell. Like it never happened, essentially. So that's a little bit not cool. So, but you'll notice that with enough confirmations, it's not so hard. So it's up to you if you want to use that. I don't know about the alerts. I turn all of my alerts off except for ones that I actually want, such as like a dashboard or, when price touches X area. I have all my alerts off because otherwise that's too much alerts. Too much. Let's see. Okay, Derek, how do you set up the TK crossover and how does it compare to the 8 and 18 moving average? So that's a phenomenal question, Derek. Let's take a look. So as you guys can see, I don't know if the Zoom is blocking you, but this is the chart pretty naked with just the TK crossover, okay, and the 50. I took off the cloud because it's too much noise, and everyone who says don't trade in the cloud, it's just a mess because the whole mentality behind that is silly if you're asking me. What I will do is I'm going to go ahead and put a crossover right here. I'm going to change this to be, let's just say, orange. Okay, so you can see what we're looking at. And now these are both faster and slower EMAs. I'm going to change this to be the 8 and the 18. I always turn off my alert. I'm going to hit OK. I might have to make that bigger, so we can see it. So this will be able to kind of tell us what the difference is. I'm going to go to color, make it big. Make it big. Okay, boom. So this is how often the 8 and 18 cross over. Okay. And it's not a perfect science. It's just a quicker way to do it versus eyeballing it. So the 8 and 18 would have been faster in some cases, but it would have happened too frequently in other cases, right? So this was technically a TK cross. This was technically a TK cross. This was a TK cross. This is a TK cross. This is. So again, this isn't a good area, so let's dismiss that for conversation purposes. In this case, it happened about the same time. In this case, it happened, the 8 and 18 crossover happened probably a little before the TK cross. But keep in mind, the TK cross did not give us a signal here, and this did. So that's either a good thing or a bad thing for re-entry, depending on how you trade. There's no guaranteed right answer. This has to be, and that's what I'm learning, trying to teach people and grow accounts live, is there's no cookie cutter answer for that many people who all come from different parts of the world and mentalities and so many things. So again, the 8 and 18 would happen faster in some cases, but there's also more noise in some. And in other cases, that's the exact same. This happened first, but that would have been a false signal. However, you got the same false signal here anyways, and it knocked you out here. So this would have told us to sell, and this would have been late. So we definitely would have hit a stop loss. This would have told us to been sell, and if we got in immediately, we would have been right. So this is just a way to kind of analyze the difference in how they work. And this isn't the best way. The best way would be to have all 4 lines on here, but this is a quick way so your eyes can kind of see. Again, the 8 and 18 crossover happens a little before the TK cross in most cases. There are pros and cons, again, depending on how you trade. I think the biggest difference would come into play when you get to moments like this. Let's get to that spot. So we got the crossover here clear as day. We don't get a separation from the crossover, so this isn't supposed to count until it actively crosses over, where they are separate lines, according to some people's cloud theories and rules. So this is when you would get in on this one, and this is when you get in on the N18. So when it's kind of conjoined together, it might be more beneficial. Same thing over here. You wouldn't actually get in until it separates. So there's pros and cons. Just depends on what your eyes see better. I don't think there's a cookie cutter answer. So if you like one thing better, then you should use that. My objective tonight is to show you guys that I don't really care what you like better. Let's create the set of rules that works for you. Yeah, let's keep it and honor, Pat's arrows and his daily dots. Pick something, and let's create a set of rules that can make you an extremely profitable trader based off of how your eyes see it. You're welcome, Derek. Hey guys, I'm going to unmute the lines. So if you're not going to talk, please mute yourself, okay? Unmute.
Oh, shit.
Somebody just said that one. Okay, so now that I unmuted you, if you have a question, go ahead and you can unmute yourself. But if you don't have a question, please don't unmute yourself. Anybody at all? Let's see. Sorry. Was that you, Derek, who said, oh, huh? Was that you? Seriously. All right, any other questions, comments in terms of some basics? Please do not be afraid to ask me something really silly that you've been afraid to ask. Please do not be intimidated to ask one of those questions that you don't know. Please, 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 because you might help somebody else who doesn't have the courage to. Connie can't unmute. Let's see. That's funny, Dan.
Senior team came back to us, systems management, said we'd rather you do this maintenance during this window.
Okay, one more time that I have to do that one.
We'll be down for an hour. We might be up a little bit sooner.
And there we go. Sorry about that. Connie, now you can unmute yourself.
Hi, Jenny.
Hi, how's it going?
Okay. I just wanted to know one thing. You will be posting this today's video we can watch later?
Yes, sir. This one will be posted in the SuperEZ Google Drive, as well as in the notification channel and in the SuperEZ group.
Okay, great. And I was just wondering, these arrows, the crossover arrows, 8 and 18?
I just put that on here just so we can...
But if you, I was just observing, like whenever you have those supports, immediately after the support, if you see the arrow, it works real good.
Yeah, it does. It really does. This little arrow is my favorite if I had to pick any arrow. And please keep in mind, people send me a lot of arrows. So when I tell you that my little arrow is my favorite, it's my little friend, it gives me the least trouble. It's usually really accurate. Depends on how many pips you're going for, but it's really good. And you can play with these numbers. So maybe you like certain, and this is the same thing as the yellow arrow. So if you click on your yellow arrow and you edit it, go to inputs, you can type in whatever numbers you want. You can type in the 10 and the 50. You can type in the 4 and the 50. You can make a difference and make changes in this to see how right and how often something would occur and how it would work for you. So please do play with the crossover arrow. Your guys' version is called the yellow arrow, but it's the same thing. So please do play with that.
Hi, Jenny.
Hi, is this Connie?
Yes. How are you?
I'm fantastic, and you?
Good. I'm great. Thank you. Okay, I know you've talked about this before, but I don't know if I wrote it down wrongly. It's the MT4, like we're going to trade New York time. I'm in the Central Time Zone, and I just want to get those hours. Can you help me with that, please?
Okay, yes, ma'am. Let's do this. Okay. So I don't want to mess up in public. Let me get my pen and paper ready. So I'm going to get new sticky notes. They're bright pink, too. Okay. That's trash. Okay. So if you are Central Time, okay, make sure my pen works. So Eastern Time, let me make sure I have it right, is 1, 5, and 9. So central time is 12, 4, and 8. That's 12 p.m. or a.m., 4 p.m. or a.m., or 8 p.m. or a.m., because you are 1 hour different from New York, right? So what does that mean according to the candle times on MT4? Let's do that together. We're currently on the 4-hour chart. You're talking about the 4-hour candles, right?
Yeah.
Okay, because you can figure out the other, what is that, 18. Right now, let's only talk about the 4. So it is currently, we just opened a brand new candle. So at 8 p.m., what time is it your time right now?
8:12.
Okay, so at 8 p.m. your time, the MT4, okay, is going to say 4 o'clock on MT4, right? Are you with me so far?
Okay, I think I can't get your screen anymore. I don't know what happened. Okay, now there we go. Okay, thank you.
Okay, so at 8 p.m. your time, the MT4 candle time is going to say 4, okay?
Mm-hmm.
At 4 p.m. your time, I'm going to work backwards. Silly me. Oopsie. So this is 4 p.m. your time. I'll close out that. There you go. Is going to say 0 o'clock, right? That's the 0 o'clock candle. Do you see that on the screen?
I think it's 4.
Okay. So 4 p.m. Central Time is going to say 0 on MT4, right?
Okay. Mm-hmm.
Let's see. So this would have been noon. So noon, which is what? That's 12 p.m. Central Time, says 2000 hours, right? And anybody who trades from the 4-hour really should know this. This is super useful when you're back testing. Okay.
Okay, what about in the morning, New York time?
Okay, so 1600 is going to be 8 a.m. your time. The 1600 candle, okay, on MT4, it's 4-hour candles, right? And actually that works on the 1 hour too,
Mm-hmm.
is 8 a.m. your time, okay?
So let me see if I got this correct. Now the 20 is going to be 12 noon my time. Is that correct?
So you said what? 2000 is 12 noon your time. Yep.
And then, okay, I got you. Thank you.
Okay, so just so we're on the same page, if the 1600 candle is 8 a.m., what is the 4 a.m. candle your time?
Huh?
What MT4 time is the 4 a.m. candle for you?
4 a.m. 4 a.m. will be, I have 4 p.m., but I don't have 4 a.m.
Yeah, 4 a.m. will be the 1200 candle on MT4 time.
That's the 4 a.m. Okay, I see.
Does that make sense?
Yeah, it sure does. This is so confusing. Okay, I gotcha. Thank you.
You are welcome. All right, next question. Anybody at all? Hey guys, we separated this so we can, ask those questions we didn't feel like we were able to step out and ask. So please step out and ask. There's no harm.
Jenny.
Hey.
Hey, how you doing?
Wonderful. And yourself?
All right. Quick question. If we're trading off the 4-hour, are you saying it's better to look for the triple arrows on like 12, 4, 8 Central Standard Time?
That's a good question. That's not what I'm saying. I'm saying like, so for example, if you know what time that 4-hour candle closes and you're trading off the 4-hour time frame, and I know that I'm going to check these candles at 1600 every day. So for my fractal break strategy and my kind of 1-hour trades, I'm checking at the 1500 candle. I'm waiting for something to happen after that 1500 candle. But for my swing trades, I'm typically looking at the charts at that 1600 candle. So if that 1600, the reason why this is important is because when you're timing your trades, I mean, and there's an indicator in the group, it's called the vertical line something. And we all convince ourselves that nothing is ever setting up when we're looking, right? But I promise you, lots of stuff is setting up when you're looking. If you go back and test the time that you look every day, you're going to be like, whoa, wait a minute. If I had clicked through the pairs, I would have found this. If I had clicked through the pairs, I would have found this. So knowing, like, if you're trading up the 4-hour time frame and you're waiting for that candle to close, then you're going to check at 9 a.m. Eastern time for me, or 1 p.m. for me, 5 a.m. for me, for example. I don't usually check at 1 a.m. because I am sleeping like a baby, and I try not to get into trades before London, so I don't always take trades at 9 p.m. my time either. So the triple arrows are only going to happen so often. So if we zoom out, keep in mind the daily dots. That's one of the reasons why I love the daily dots, is because the triple arrow happened here, but we've got several other opportunities. Well, that's a bad example. Triple arrow happened here, bought, but then we have this sell and this buy that I could still take. And same thing over here. We have all these other opportunities.
And you did say you don't like the 4-hour dots because it repaints too much, the 4-hour buy and sell dots?
Well, yeah, I prefer the daily ones.
The daily dots, that's all I
People
mean, yeah.
use weekly. I don't understand why, because by the time you figure out they repainted, it'd be like way too late. So,
Yeah.
But either way, for me, there are a lot of people who use the 4-hour dots. Please don't condemn them because I say so. And when I do certain scalping things and lower time frame things, I will use them. When I do like 15-minute stuff, I will put them set at an hour. But for the purpose of how I trade and how I see the market, I simply prefer the daily dots. So I'm not discounting the other ones. I'm just so you know. Okay.
Gotcha. Got it. Appreciate it.
You are welcome. All right, check it. Next question. Pop quiz. Okay, so Chris, how are you? Here's the deal. Actually, let me do this. So we are on NZD CAD. Okay. Ready? And TradingView does not do a great job at this, so kind of bear with me, but it's a nice visual explanation, okay? So let's say that I got an alert for price coming down here. We broke the 50. So I'm going to use TradingView. I'm going to, as soon as it catches up, I'm going to apply a short position, right? So let's say I didn't get the perfect entry. Let's say I actually had a life and I wasn't at home, okay?
Lost half
I
your
was
screen.
doing something else. Huh?
Your screen is cut off. It's only showing a sliver of the, yeah, there you go.
Huh. Oh, I know what I can do. Sorry. I can go to it on this. Now I'll have to open it from here. Bear with me. New tab. Might want to get out two hands so I don't look like a complete silly butt. TradingView.com. Okay. Make this big. Let it load. Sorry, guys. Go to chart. Well, this isn't what should have came up the first time, but it's okay. Load chart laid out. Sorry, I don't usually use this one. So if I'm already logged in, I don't have to do all this twice. But back to what I was saying. Now I'm on CAD JPY on the 4-hour chart. Okay, I'm going to go ahead and delete this line if it will let me. Okay, I'm going to ignore that line. So let's say we bought. We got enough information to say we're going to buy right here. We broke the 50 with momentum, and let's say we didn't get the perfect entry, okay? So let's pretend like we didn't know, because that's probably the case if we're all being honest. I'm going to go to a long position on Trading View. Let's say we waited for that candle to close. We didn't get in until this candle. The stop loss is however big we decide it to be. So if we were going off of the previous low, that is where it would be going. Currently, my stop loss is 113 pips. My target is 74 pips. So I don't even have a 1-to-1 risk to reward ratio yet, do I? So 1-to-1 risk to reward ratio will happen when I get to 113. Okay. So 113-ish, give or take, pips. Keep in mind, this doesn't account for spreads. It doesn't account for fees and commissions and the price of business. We'll just call it the cost of doing business. But this technically is a 1-to-1 ratio, okay? Approximately, exactly, you know. I don't want to play with the numbers too much. So how do we change that? Like, if we were going to tighten the stop loss to say, hey, if price breaks below back that 50, I'm getting out. So now we've just cut our stop loss in half. So now we have a 2.1% risk to reward ratio, okay? Now, what if we said, hey, I'm very confident in this on the daily chart. So I'm going to go to a bit bigger time frame. Now, this is going to continue all the way up. And I think it's going to hit that high. And this is just for conversational purposes to talk about the risk to reward, just so you guys know. So now we have a 291 pip take profit and only a 53 pip stop loss. So our risk to reward ratio is a 5.4 to 1, give or take. Okay, these aren't exact numbers, but we have approximately a 5 to 1 risk to reward ratio. Okay, I don't want to be exact because there's so many variables that you guys all need to consider if you're going to be entrepreneurs. Like, I want you to know that the odds are difficult, but it's possible. And that's what it's going to take is to truly understand that it's possible. So how you're figuring your risk to reward is that your take profit should be far bigger than your stop loss. And if you keep finding yourselves in trades that, like this one, including myself and anybody else, I've 1,000% guilty of it too. I want to find a short. Similar concept. So let's say we want to take this trade, but the stop loss has to be 89 pips on this sell right here, about 90 pips. And we know, let's say we're going to take it right there at the break of the 50, because we're going to jump the gun. We're very confident that it's going down. But we also know from looking left that there's resistance like way up here. Let's just pretend like there's some resistance, because there is a little bit of resistance, right? So let's say we have resistance in this area. Maybe it'll let me drag this line. I hope it will not. Whatever. So we have resistance and we go to take this trade, but now we're risking 91 pips and we're only gaining 59. This is not a wise trade to take. I don't care if we had a 9 out of 9 in terms of our confirmations. If we have to risk more than we have to gain, we should avoid that trade, which again, we don't know until after the trade is played out. So when you're marking up your charts, when you're making these drawings and all that other good stuff, I'm going to delete this. We're currently on the day chart. Let's go back down to the 4-hour. Okay. Let's take this off the buy. Okay. I'm going to delete that. If it'll let me. Delete. So we came back up and we tested a big area. So we're trying to zoom back over. This was a huge drop. So for it to come back up and retest the 71.2 or whatever number that is exactly, very, very common. We broke above the 50. We're on the 4-hour chart. We're staying kind of above the 50. We took this as a sell on the 1 hour, closed out in profit, but we took it on the 1 hour. So according to the 4-hour, now we're seeing this kind of corrective move. A lot of people would call this a crown and call this whatever we want. But either way, let's just say that we're going to catch this as it is right now. Let's say JPYs are selling, and we're trying to chart of what our risk to reward ratio is going to be if we wanted to sell this as of right now. In a short position, based off of where price currently is, okay, our stop loss is going to be above the previous high. So that's about a 46 pip stop loss. And let's say we're pretty sure that it's going to retrace at least 50% of this move. So statistically speaking, 61.8 is the most common, but same concept. That's anywhere from 290 to, we're going to ignore that wick, but 351. We're going to ignore that. We're going to go with the common ground because it's the most intelligent thing to do. So let's just go ahead and say 270-ish pips. Half of that is what? $1.35, right? That's currently set to 86 where it's at now. So $1.35 would be from where price from the top. $1.35 would be about almost exactly where I put that. That was lucky. That's a God thing. Anyways, I get excited about little things, but that's about where we'd have it, give or take, if we're going for the safest take profit. Now, of course, we could do multiple take profits, which, as most traders know, we do. A lot of people do. I have done in the past. So we would draw 3 blue lines and say the most likely target is here. Your target should be blue. Your next target is here. Okay, because these are the safest probable take profits. And then your swing target is here. Move this up. Boom. So if we entered here, here's our stop loss. We're hoping it comes down to here. That's our swing target. But we have our scalp entry, our intraday, and our we're going to let this one run. So that's, I don't know if that answers your question or not, but this is kind of how I would have it set up. The whole concept is you need to be risking less than what your reward is, which is the only big problem with scalping. Because when you're scalping any market, if I move this over, you still have to allow the market to breathe. I mean, no matter how we look at it. Okay, stop it, silly butt. No matter how we look at the market, we still have to allow it to breathe, whether we like it or not. So since we have to give it room to breathe with the wicks and all that other good stuff, if we went to buy and we only had a 5 pip take 5 pip stop loss, it's going to get wicked out a whole bunch for a very small take profit. So that's the biggest downside to scalping, and it takes a lot of time. So the whole concept to risk to reward is you need to be risking less than what you are gaining. That is the end all be all. I don't care what system you use. I don't care how you trade. Perfect that rule to where like you only take trades that have a 2-to-1 or greater risk to reward ratio. Then you will be unusually successful. Because with the 2-to-1 risk to reward ratio, you only need like a 40-some-odd% accuracy. Because our feelings lie, the numbers don't lie. You can't see anything right now? Thank you, Chris. Oh, okay. I was like, you guys can't see anything right now? Because I'm on my VPS, so like you should be able to see this. I'm pretty sure. Okay, I'm like, really? But that's it. I mean, no matter how you're looking at it, guys, is if you're finding trades. So if we took this as a buy, we had enough confirmations. A 4-hour, we broke the 50. Almost nothing else. We had all this consolidation. We broke a higher high. Fractals were all broken. We took it. All we need is a better amount that we're gaining than what we're losing. If we do that with a 2-to-1 risk to reward ratio, you only need a 40-some-odd% accuracy to be profitable. Going from take profit to stop loss and nothing else. With a greater than 2.1, you need even less than that. And that's where that whole break-even trades come into play and all that trade management comes into play. This is one of the biggest rules you should have on your chart. It's your risk to reward problem. So, DJ, and shooting for a 4% accuracy is a modest pursuit. It is, huh? Well, like DJ can tell you, like, so he's fine-tuning to the next level. He doesn't know it yet, but he is. So yes, 80% is good, but then when you realize 80% is nothing without risk management, then you're like, oh man, I got 89% again this week, and I'm like basically balancing it out. What am I doing? Like, I'm not really losing money, but I'm not gaining any money, and that's the whole point here. Once you realize that, then you're going to go down to your trades, you're going to go down to your stop losses, your take profits, and say, okay, so what can we adjust? What I want to go over with you guys in the 6-figure group is this, is actual numbers. I don't know if I'm going to just draw messy on my iPad or something, or literally like just post a bunch of papers and let you guys see what my chicken scratch of what we're looking at. Because this is simply numbers of if your trades and grab a piece of paper and do it yourselves. I promise you, pick 10 trades. If they all have for example, pick some rounded number in terms of take profits and stop losses. And then, of course, there's going to be the next level after this level. But this is the next one for you, DJ, is to figure out the take profit and stop loss. Better risk to reward. Most important thing you can learn at this point, because your accuracy is good. Now, how do we fine tune it and make sure you're only taking trades? And that should be one of your rules. If your trade is not a 2.1 or greater, don't take it. Ever. So you're the best, DJ. All right, any other questions, comments, anything? Please don't be afraid to ask it. I want this to be able to help some of the people who don't know what they don't know. So.
Hey, Jenny.
Hey, Brian, how are you?
I'm doing good. How about yourself?
Glad to be here. I'm honored.
Hey, I'm just not realizing I can use my mouse thing to move your screen around. Do you see that too?
Do it. Go ahead and do it.
I'm moving it now. Can you see your screen move?
No.
Okay. Yeah, I'm moving your screen around. I ain't never done that before. I ain't know what that was.
I was like, no, I don't see it. But I don't doubt it. Like, man, technology has been funny lately. I think I've been spending too much time on it. So maybe you're moving the window around, like the Zoom window.
It could be, but it's like I'm moving your whole board around. You know, I don't get it. I ain't never been able to do that before.
Are you?
That's a new update. That's a new update with Zoom that they just did. So that way you can be able, so a person can be able to see the person's screen to fit to their window capacity instead of being auto done. You can be able to move it around because a lot of people are starting to use their phones and tablets, and sometimes they're just not big enough if they want to zoom in or something. So that's just a new update from Zoom that they just did about, I think it was about a week ago.
Okay, that's what's up. That's pretty neat.
Well, maybe I should catch up on that because I thought I could zoom into Zoom. Wow. I thought I could zoom in before last week, or did you, like, how do you know that?
Because they sent the Zoom update and it says it in there, they bug fixes and, you know, they get little messages on what you can do. And you can always look up on YouTube new updates that Zoom is doing.
Well, if something came to my email, I feel bad for it because they're not getting through to me. There's so many emails. Like, yeah, I do business on so many different platforms. I have a personal assistant who does certain companies, and email is just not a good way to get in touch with me. Let me tell you, I try, but it's really not. So we shall see. Is there any pairs you guys want to look at? Any questions, comments, anything at all that you guys can kind of think of?
I have a question.
Yes, ma'am. How can I help you?
How do you go about trading when you have different, like conflicting trends on different time frames?
That's the problem. This is Barbara, right?
Yes.
So let's go back to MT4. I'm going to minimize this. I'm going to close my chat window. So let's go to just the bread and butter, okay? This is a little cluttery, but it's good. So let's stick with good for a minute. I get it, it's kind of cluttery. So, or we can use the triple arrows, it's probably better to use. The problem is the more often you do that, I did really well with the 1 hour with the triple arrows for a long time. But the trades I lost, 100% of the trades I lost when I back tested them and figure out what I went wrong. And I went as far as to enter the trade in using the trade manager and then back testing that. Like, so I figured it out to the deepest part. Every trade that I lost was 100% due to being against the 4 hours. So of course I fixed that, but I didn't have 100% accuracy. So then you have to fix the next thing. It's a process. It's not always fun, but it's the truth. So you, if you're asking me, have to decide what kind of trader you are. And your job is to find those rules and to stick with them. So there's a guy on the call tonight. He loves the 15-minute. I don't. But he makes sure it's in line with the 30-minute and the 1 hour. And he takes those trades. And he has pretty good accuracy. There's other people who use the day one chart. I don't. But again, he knows what he's doing. He checks it every day in Asian session. He takes it according to his rule. And again, he has X amount of accuracy. For me, my thing is if I'm using the 4 hour, I don't care what the 5, 15, and 30 minutes are doing. If I'm going to trade live with you guys, I think I am going to start caring quite a bit about what the 1 hour is doing. because a lot of people freak out holding a trade, and I'm like getting so emotional. But I know how to hold a trade, so I'm not worried about what the 4 hour does. Most of my trades close in profit one way or another. And as you guys know, I use a lot of trade managers that will protect me in the case of anything. So I honestly don't usually set stop losses because my EA has a stop loss on it. So when I say I trade at the 4 hour, I mean, I really don't look at anything else. And I mean that with 1,000% honesty. So for my swing trading and my like longer term, my pips per week account, will I scan through a couple time frames like the 4 hour and the 1 hour? Sure. And I'll chart it up. I'll just chart it up like on TradingView just to see what I see. Yeah, I'll do that on multiple time frames. But in terms of the indicators in this kind of setup, I'm only looking at the 4 hour and I'm dismissing everything else. Because the more we find that, okay, great, we find something on the 4 hour, it looks great, and it turns out to be right. We didn't take this trade because I'm willing to bet my butt that we had a 1 hour say buy here because we had already made a low and a low. So odds are we had a buy arrow in and around here. So we would have not taken this trade. We would have missed it. And I found that to be the case more often than not. Does that make sense? So pick a time frame. If you want to trade off the 1 hour, but it has to be in line with the 4, do so. You'll find maybe 3 to 10 trades a week, depending on how many hours you're putting into it. If you want to trade off of the 30-minute, but it has to be in line with the 1 hour, then do so. But this is meant to be a career, if you will, that you work 2 hours a day or something, 4 days a week, and you stick with it. And those are your rules, and then you follow them for X amount of weeks until you get the results you need and get them back. That's really all it's going to take. Most things work if you work it, but most people are all over the place. So it won't work. Does that answer that question, though?
Yeah. I just was wondering how you dealt with it when you have the different ones. So far, I've just been doing the 4 hour also, and it just seems to work for me.
Like between you and me, Barbara, I wish that the group was able to mentally and emotionally handle the 4 hour trades. Because as you guys saw on my trading view, I get alerts based off of the 4 hour. I take, give or take, anywhere from 5 to 10 of those alerts a week pretty accurately with very minimal analysis and no drama. Like I have no stress about it. The ones that hit a stop loss, I don't care. The ones that hit take profit, I don't care. I like literally not a care in the world. And it is the most simple, stress-free thing to do. But people like have moments like this and they are just out of their mind. And this is a slow mover, and I'm willing to bet people have this happen. What is that? It's only 20 pips. That's a really bad example, an unfair example, but you get the point. And then we end up losing trades trying to set stop losses too tight. It's not fun. So you'll find the highest quality, longest lasting, most accurate trades, above the 1 hour. Period. So anyways, I hope that helps.
Are you going to post any of those trades, the 4 hour trades, 1 hour, 4 hour trades?
Anil, can you repeat that?
Could you please post those trades with the 4 hour and the 1 hour trades on the 6-figure?
Yeah, I'm going to just do 4 hour and 1 hour. I believe Elvis is doing a 5-minute cloud thing.
Yeah, I would really like that.
I'm glad that you like it. His has been pretty accurate. He's got a pretty high accuracy ratio. I don't prefer the risk to reward mentality, but he does have a pretty good accuracy ratio. So if you're staying with safe tradings and you're managing them well, I'd still say they're cost effective. So maybe he's not as great at calls as like I am, but he's really good at signals, and that's okay. We're able to do that. And Pat is really good at the now and later. I'm not. And so that's fantastic. So Charles, yeah, I'll take a look at it allows you to close up something specific. Hold on. I don't know what you're saying, Charles. It allows you to close up something specific. But I will answer your other questions. Yeah, Chris, I just stopped trading against the 4 hour. It doesn't mean you can't have success depending on what system and strategy you're using. But again, you have to decide based off of the time you're in front of the chart, the hours and the how tight of a stop loss do you need. And we can go over that like on a one-on-one, but it has to be consistent. So, all right, Charles, you wanted to take a look at USD Chef. We were selling this. We never hit take profit on this, ever, which is super silly, but that's okay. So we made a higher high. We broke here and here. Kind of played around a little bit, came back down. We took an entry up in this area because it was a pending order and I didn't want to miss it overnight. I, to be honest, did not check the news. I was pretty confident of the trade. I still am, but I did not check the news. Let's see, this is my oldest coming in here because he doesn't know, obviously. Oh, thank you. You can't be quiet opening that door. What are you thinking? That office door is way too loud. All right, I love you, kid. He just brought the mail. It's a bunch of junk mail. So back to USD Chef. We were selling this pair. I do think it's a sell, but obviously we made higher highs. So now we have to go off of what we see. We had support all the way from 9/11 to, well, now, and today is the 19th, or it's the 20th technically in trading time. Still the 19th. Well, it's the 18th. Okay, fair enough. So we currently made a higher high. Granted, it's a wick and it's a doji, and then our most recent large candle, our most recent engulfing candle does happen to be a bearish candle, but again, we have not broke the 50. So having said that, this could just be a pullback that comes in up and retests this zone to make a nice head and shoulders. Very well could be what happens, and then drops. But either way, if you are in profit or close to profit, be very careful because they're really playing with the US dollar quite a bit because of the FOMC interest rate. And that oil did a number on our economy, especially with so much other stuff going on in the world. So when oil is messed with, the oil industry really messes with the American economy quite a bit, and Canada too, in a different way, Canada, but the American economy in a different way. You can feel welcome to read up on that. It's kind of interesting and long-winded. But either way, look into that. What I see is a possible head and shoulders forming, which would mean it would come back up and retest here before it drops. But we also know we have news. All three of these red lines are news. And we do have triple arrows on the 1 hour. Pretty sure we have them on bigger time frames too. Let's take a look. That's what I see. Do I think this will overall sell? Yes, I do. Do I know if it's going to sell after the news or before the news? I don't know. I don't know. So this made a higher high, and we have to kind of go off of that reality. So this is the 4 hour chart. We kind of nice pullback. We are just still making higher highs. I like that this is an engulfing candle and that we're kind of retesting 50% of that, but still we need to break at a lower low for us to trust it. And that's just kind of where we're at. We don't have enough confirmation at this time on the 4 hour at all, but we do have the one single big arrow. So I would definitely wait till after that news. Sorry. Yeah, that was off the daily on the 1 hour chart. Gotcha. The only thing I'd be concerned about is that news. So you have your daily dots. So now you have 4. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, that is 5. Which is awfully silly considering we're only 2 candles into a new day. Because these technically can back paint. These are daily dots that are appearing. Oh, that's on the 1 hour. That makes more sense. So there's 5 hours worth, which is 1 candle and a half. I mean, so could we potentially sell? We've got a wick to the upside, yeah. But it looks like the buyers are kind of, momentum is low, buyers are stronger. We're still above the 50 line in terms, the 0 line in terms of the MACD too. So, I mean, this is what we would call a sweet zone according to some other fancy tools. This is what we call a sweet spot. So if we went to a more naked chart, this wasn't it. Let's go to a more naked one. This area, USD Chef, which is why I wanted to sell it, if we go to a bigger time frame, is a really, this area, don't think of it as a single spot, but it's a sweet spot. We've done a lot of stalling in this area for quite some time. So there's a good chance we're going to have a pullback. It doesn't mean it's going to go forever, but I saw this as a long-term sell because the biggest, so again, I think my take profit was 99.6. So that's 200 pips. 9.6.
Where is that, Jenny?
This is USD Chef. So if this does drop to kind of finish another pattern that it's creating, because there's a harmonic pattern on this pair too. So other than the news and the drama involved with that, I do think this is going to sell. It doesn't mean they can't pull with the market, and I can't guarantee your account can handle that. So that's the hardest part, is it's easy to be right in trading. Being right isn't the problem. So we entered in, give or take, somewhere in this area. It came up and it had to be after this because it made a higher high here. So we were using the 1 hour chart. Let's see. Let's go over kind of more of a naked chart. So we weren't stopped out here. We didn't get stopped out until it actually made a higher high, at least most of us. Do I still think this is going to sell? I do. But right now, this is what the market's doing. So if you wanted to enter a small position that was like less than 5% of your account prior to the news, go ahead. There's a good chance they're going to use the news to push it in the direction we want it to go. But in the meantime, they could very well just blow a few accounts, pushing it higher and higher and higher. This way, they get all the money from the sell. So it's a thing. It's real trading, unfortunately. The market did gap down this week, which is a very good indication telling us where they want it to go. But we also know the U.S. dollar has been unusually strong. That has a lot to do with the gentleman we have in right present. We have increased quite a bit of wealth back into America. And nobody wants to discuss that, but the U.S. dollar, U.S. 30, I mean, all of the stocks and the value of the American dollar is increasing so much. And that's, again, not somebody's opinion. That's just economics. That's the reality. So something to think about. But anyways, that's what I see on that pair. He has yet to, Mr. Simple, please change your name to your actual name. And also, he has yet to do a class. I think there is one recorded. I don't know what they're going to do moving forward in terms of signals and classes. We're working on it. So he tried on Monday night. There were some issues with teleconferences. He did a call like 2 nights or 2 weeks ago or something. That was like a lecture mode call. That was a phone call only. And that's what I know. So I don't know anymore. Oopsie. No idea who that is. So I will decline that call. Are you there still? When did that call knock the Zoom out? Is anybody still there? Peekaboo, can you guys still hear me? Okay, cool. But yeah, I don't know when or if he's gonna do a class. We all have our different gifts. He's really good at signals though, so I know that much. Yeah, cool. Good job, DJ. DJ, you trade all the time though. How many trades are you taking every day?
A lot.
But that's the problem. So do you have a rule that says, hey, once I win 5, I walk away?
No, I have a rule that says if I lose 2, I walk away.
Well, isn't that backwards? So you're going to keep going until you lose? Versus I'm going to keep going until I target.
I see the logic. I do. But lately I've been kind of on a roll. But like I said, when I do lose, it's pretty big. So
Well, that's why you have to stop by your head. So like maybe make a rule that says since you're a scalping machine right now, I will take 5 trades in a day, win, lose, or draw, and walk away. Or maybe make a rule that says, okay, I'll take 1 loss or 2 losses. We already have your loss rules for 2 losses. But fine, at least make it to where you won't take, more than 10 trades a day, and you won't be in more than 2 to 3 at a time, right?
yeah, typically I'm only in 2 trades at a time.
All right, awesome. Well, not bad. And you're still doing the now and laters?
Kind of. It's more of I kind of got my own little twist to it because I don't exactly follow the way that that the strategy is laid out for everybody. I just kind of got like I don't know. It's kind of different.
Okay, fair enough. And that's really okay. And you're using
Yeah,
the fractals too, right? For entry, not for stop loss.
No, if I'm being completely honest, not during the scalping, but when on my longer term trades, yes.
All right, cool. Well, that'll work. Well, then keep it up, but just have a limit. Because listen, please understand that if you can take 30 trades and you lost none, 30 trades from $100 is still very close to 6 figures. So if you're taking that many trades in a day, just to show you what's possible. Like some people can do that in 2 weeks, DJ. Like turn a very small account into 6 figures in 2 weeks.
That's the goal. That's why I'm taking so many trades.
No, you've got it backward. That's in your mind. Like you got to stop at some point. So like don't take more than 7 or 8 in a day. So know when to stop and then start fresh another day. 7 or 8, because think about that. 8 times 4 is what? 24, right? No, sorry, 32.
No, it's 32. It's okay.
24.
It's math in public. I know.
I don't do math in public. That's why. Duh. Okay. Anyways, other than that super embarrassing moment. So 8 times 4, yeah, is 32. Either way. So one of the challenges, I think I know why I said 24 too, is because one of the challenges was $100 to $1 million in 24 trades based off of 10 pip take profit. Crazy.
That's crazy. Yeah, so I basically we could get $1 million in a week from a $100 account.
Yep. But that takes 100% accuracy. You can't lose a single trade, not even one, because you're essentially risking 48% of your account every trade.
Well, you know, I'm about 15-20% away from there. I'm almost there.
Okay. Well, that's why don't be upset about the ones that broke even, because anything to keep your accuracy high. Because the second you can control your accuracy, you can do something like that. Make sense?
Yeah, understood. Thanks, Jenny.
You're welcome. All right, guys, anything else that I can help you with or questions I can ask in terms of some basic fundamentals? I really wanted you guys to have something to start with.
One quick question, though.
Yes, sir?
The chart you have on, the arrows, the green arrows, what the indicator is that?
That's just our big arrow. That's all it is the big arrow.
Okay.
That's it. We have that. You have that too?
Yeah.
The SuperEZ group, that's all it is.
Okay.
Like I said, so what if it repaints? If you follow just one rule with the big arrow, so ready? One rule, one big arrow. It has to break the 50 and you have a big arrow. That's the only rule you have and nothing else. It has to break the 50 and you have a big arrow.
That sounds
this alone, so let's say the arrow was here, maybe it repainted a few times like I went over earlier in class. It's okay because it never broke the 50. And you just keep on trucking. I promise you, this one would have stunk because it came back and probably knocked you out. But either way, more often than not, probably very close to 90% because it's using the 50, your accuracy will be on fire.
Yeah, I mean, your stop loss is below the arrow. You should be fine.
Above it, yeah. So if you're buying or selling, your stop loss would go here.
Above or below the arrow.
Yep. But you don't take the trade until it breaks the 50.
Right.
Do not take the trade. So this one would have been kind of scary and awful, not fun, but you would have won. And that's perfect, obviously. So we're going to ignore that one. This one is nice.
A good
okay?
strategy.
Super simple. Nothing but Pat's arrows and the 50. And
Jenny, is that your 50?
Huh?
Is that the 50?
Mm-hmm.
What time frame is the best?
4 hour. 50 exponential white. This is honest to God the 50. It's just zoomed in real tight, so that's why you see it that way. Chris, so there is a cool tool that goes around. I don't know if I have it. There's so much stuff I can't find it all. That will like show you the 50 on the 1 hour and the 50 on the 4 hour and the 50 on whatever time frame. I really trust the 50 on the 1 hour and the 4 hour. I think that's the best time for me to trust the 50. So a long time ago, I had to decide what I would determine the trend is because I couldn't find one answer anywhere. So I decided that if it was above the 50 on the 1 hour, I was considering it an uptrend. If it was below the 50 on the 1 hour, I was considering it a downtrend. And those were my rules for me because I couldn't get a single answer from any one person. All the IML educators, I got so frustrated one day. I went on every class that I could fit into, and of course, kept waiting and waiting and asking questions in the chats. Every single IML educator, like I asked them all, how do you determine the trend? And I'm kind of I get real headstrong sometimes. That's part of who I am, for better and for worse. So when I say I got on almost everyone I could, I mean almost everyone I could. I got up at all the random times. I asked all of them, and no one could tell me what the trend was. Like they all had some, well, depends on, you know, where the market's going to stop. Because to me, that was like the last question I needed to understand before I could become a good trader, and I felt like I wasn't getting an answer. So all the Google research I could do, all the IML educators I could ask, and my final answer was, I'm going to trust the 50. I'm going to trust on the 1 hour, and say if it's above the 50 on the 1 hour, I'm considering an uptrend. If it's below the 50 on the 1 hour, I'm going to consider it a downtrend. And I kind of stuck with that rule. I mean, yeah, clearly the 4 hour is better, but my original rule started with the 1 hour. So you know. Any other questions? Sorry, I talk fast. I'm really trying to slow down. You should see me on Real Coffee. You guys would be like, oh my gosh. Let's see. Anybody else? Anybody at all?
Jenny, I have a question.
Hey, Lewis, right?
Yes.
How can I help you?
I missed the, I wasn't able to get on at the beginning of the class. I don't know if you covered this, but I know you're talking about back testing. When it comes to back testing, are you using just the time on your chart and looking back in time at specific times where you see something?
For what purpose? Like what is it?
Say just back testing, say a certain time frame, and say maybe the movement of the direction of the chart.
So you have a few options. You can use the strategy chester up here, okay? You have to use an EA based with it in order to do it. That's option number one. A more visual hands-on way would be to draw a vertical line, and we even have an indicator in the group if somebody wants to drop that real quick. But it will draw a vertical line like at every candle. For example, let's say that you know you're going to be checking your charts, Lewis, like every 1,500 candles. So you know you're going to check your charts every morning, right? Kind of mentality. I'm on the 4 hour, so we're going to go to 1,600 candle. And it will draw you a candle every day at that time, a vertical line. So when you back test and your mind is playing tricks on you, you'll be able to see when you drag and drop all the different pairs, this was telling me to buy on Tuesday. This was telling me to sell on Tuesday at the exact time I was looking at it, but I didn't see it. I didn't pay attention. Why? So to me, doing it this way, I find it to be very good. I find it to be very good. Because you can't deny that. You can't lie to yourself anymore. Because we always second guess ourselves. We say, well, I didn't see the move. We say, well, I didn't know it was happening, or I didn't know what I was looking for. We say a billion things to ourselves to make sense of things, right? So my favorite way, if I'm not testing an indicator exactly, and I'm seeing what sets up at certain times of the day, trying to create my schedule and to learn to trust my rules or my system, I'm going to have a vertical line based off of the hour I'm going to be checking the charts. And I'm going to click through each pair and say, okay, so this would have been right. Had I been looking, this would have told me exactly what I wanted to do. And I could have entered it. And I didn't pay attention to it. This is what I saw at that time frame, and I didn't pay attention to it. Why? That's how we self-correct, and that's how we improve as a trader, I think.
Okay. Thank you. And you said I can ask in the chat for what's that vertical line indicator?
Hey, can somebody drop the vertical line indicator into the SuperEZ group, please? Whoever's got it. And if not, go ahead and private message me and I will respond. I took a Zumba today and I tried to deal with the DMV. So anybody else who I haven't replied to on Telegram, I will get to that tomorrow morning. But I had 2 classes today, and children and dinner and the DMV. So bear with me, and worked out a few times. So just bear with me a little bit. But that's the best thing you can do. because then your mind doesn't trick you anymore. You can't deny it. You can't fib to yourself anymore.
Okay, thank you. Appreciate it. Your time.
Yes, sir. All right, somebody asked about NZD-JPY. If we just at a glance look what this market is doing on the 4-hour chart, this is a straight up downtrend. So currently, if you imagine a channel, you don't even have to draw one. We just tested the top of the channel, and now we're kind of seeing how this plays out. Again, there's big news tomorrow, which is going to mess around with the market. This pair shouldn't be super affected. We are currently kind of bouncing on that 50 line. So what price will do from here, I don't know. I sold the NZD pairs and did pretty well on them, but now it's just a matter of kind of wait and see. So we do have a big arrow. We broke below the 50. We have 2 wicks to the upside. So if this closes, for example, below the 50, now that we already have, you have a really good possibility of a sell with a good risk to reward ratio. Well, maybe not good, but a decent. So your risk would be 100 pips, your take profit, maybe 150. So maybe not a great risk to reward ratio in terms of a swing trade. Let's see, 50%. If we were expecting it to make a lower low, or even just to retest this area, you wouldn't even have a 2-to-1 risk to reward ratio if you were to enter right now. So that's what I see. Anyways, let's see. You're welcome. Thank you, DJ. I appreciate you. We can combine the 50 EMA with the true MACD for good trade confirmations. Absolutely, yes. Yes, you can. And that you'd see something like this, okay? So that's just our 8 and 18, okay? That's no MACD. One of these has it on here. Nope, go figure. There we go. So for example, if we use this with the MACD true, or we used this one with the MACD true, and I'll add it on here, just so you can see. It's just a matter of whatever your eyes see better. Some things like I truly don't like, and I think that they're inaccurate, but there's not a lot of them. In all honesty, there's not a lot that I can say have no value. Because almost everything that's still on the market is on the market because it has at least some value. Granted, some people might use it inaccurately and it looks pretty invaluable, but in general, it has a value. There's my line. Line. Right, okay. So similar concept. Let's go ahead and drag and drop NZD JPY on here. Boom. See where our daily dots are? I'm going to need to right click and refresh. Okay. And that's my life in a nutshell. Popcorn, please. Okay. Anyways, so we've got our triple arrows, obviously. I'm going to delete this crossover arrow now. Okay. I should have just deleted it. Nope. I guess I'm going to leave it. So we have our 3 arrows plus an 8 and 18 crossover. We have our TK cross. We have daily dots here. Okay. Not super advantageous. And we're just now coming out of a place where we're going to have news. But we did break below the 0 line. Okay. In terms of our MACD. And it looks like our sellers are trying to gain some strength. Maybe it is somebody else moving my screen. So that's kind of what I see. To explain, what is your name? Letron. Whoever's got the Yahoo email address, please change your name to your actual name on Zoom, just so you know. Is there a news indicator? There are a few free ones in the group. Thank you, Connie. I appreciate you. and explain the MACD. So I see the MACD in two ways. You have your fast entry, which is the crossover of your buyers and sellers, and then you have your more accurate entry when we actually break the zero line. So there's not a right or wrong way to do it. Personally, I tend to like the break of the zero line. It keeps me out of this long movement, because to give you an idea, the MACD would have told us to buy here. Would have told us to buy again here. It would have told us to buy here, and pretty much all of this, right? All of this we're still technically buying because our crossover. But the break of the zero told us to buy here, to give you an idea. So I count this as two confirmations. One of them is my crossover. I'll use the sell for this example. When my sellers are now above my buyers and we have that crossover, that is one confirmation. When it breaks the zero line, that is two confirmations. So when I count them out with you guys, this would be 1, 2. Sellers are in control and momentum is high for this one to count. This would be 3. Triple arrows is 4, 5, 6. Daily dots is 7. TK cross, in this case on this chart, is 8. 8 and 18 arrow is 9. Break of the 50 is 10. Break of a trend line is 11. Engulfing candle would be 12. So on this chart, we would need 12 confirmations. We could take anything above 10. 10 confirmations or more, and you will have a winning trade more often than not, without a shadow of a doubt, period. So, all right, guys, can you explain the ADR line on the other chart? Justin, I would love to. Can we go over that next time? I've been talking for 2 hours. So, Justin, remind me to go over that next time. Hey, guys, when you come up with these classes or these ideas throughout the week, when you have questions about trading or a stop loss or a pair or maybe how this indicator works, don't be shy. Write them down and then maybe message me before the class next week, and kind of we can go from there. And I will be happy to walk over some basics in terms of trading with you guys, like on Tuesday nights. I'll even try to fit in another one at a different time for just the SuperEZ family to the best of my ability. But tell me what you need as newbies, and I will do my best to explain it in the most simplistic way I can. So I super appreciate and love all of you guys. Thank you for jumping on and hanging out with me. I adore you, and I cannot wait to see you guys blossom into everything you guys are growing into. So have a great night, sweet dreams, God bless, and all that good stuff.
Thank you, Jenny.
Thank you, Jenny.